Hello, everyone. Welcome to TDK Ventures Energy Week session on the future of electric vehicles and charging infrastructure. We're excited to have you join our session, and I can't wait to dive into today's discussion. As a quick refresher, TDK Ventures is the venture capital arm of the Japanese electronics giant TDK Corporation, and we are hosting Energy Week to highlight a diverse set of discussions around innovations needed to fight climate change and drive energy transition forward. My name is Andrew Maywa, and I am an investment director at TDK Ventures, and I focus on investments in mobility, robotics, and industrial automation. I will be moderating today's panel, which covers a wide variety of topics related to electric vehicles and EV charging. Today, we have a very talented group of speakers from across the ecosystem to discuss these important topics. Peter Gaidos, Rebecca Walkoff, Ayn McKendrick, Maria Butron, and Holly Wu. Now, I'm delighted to introduce our amazing panelists. First up is Peter Gaidos, who is a partner at Fifth Wall, where he co-leads the climate technology investment team. Prior to joining Fifth Wall, Peter was the head of venture capital at IPM Group and managing director and portfolio manager at Presidio Partners, where he focused on climate tech and biotech venture and growth investments. Peter has been involved in several public listings, including C Nanotechnology, Arcadia Biosciences, Auspex Pharmaceuticals, and others. Few people have been so deeply embedded in the commercialization of novel technologies, and we're honored to have him here today. Next up is an expert within the energy management and energy storage spaces, Rebecca Walkoff, who is the Chief Technology Officer and co-founder at ChargeNet Stations. Rebecca and her team developed ChargeNet's front-end and energy management platforms. At her past role with NLX, she prototyped, scaled, and patented NLX's energy storage optimization for both behind-the-meter and front-of-meter use cases. Thanks so much for joining us, Rebecca. Up next is Ayn McKendrick, CEO and founder of Faction, which is developing driverless three-wheel electric vehicle fleets. He has a long track record of developing cutting-edge consumer electronics products and technologies over the courses of his career at several startups. Prior to forming Faction, Ayn was the VP of engineering at Starsky Robotics, which became the first company to operate completely driverless semi-trucks on public roads in North America. He was the senior director of Netflix's partner products team. Ayn began his technology career as one of the co-founders of Palm Computing, developing the original Palm Pilot PDA. Glad to have you here, Ayn. Next up is Maria Butron, a principal at Piva Capital, which is a $500 million fund investing in industrial and energy technologies. Prior to joining Piva's investment team, Maria was a consultant at Schlumberger Business Consulting, which was later acquired by Accenture Strategy Energy. Maria has a strong background in chemical engineering. She also holds an MBA from UC Berkeley Haas School of Business and was named Forbes 30 Under 30 for Energy in 2020. Closing out the group of exceptional panelists, I'd like to welcome Holly Wu, who leads the North America Tech, M&A, and Cooperation Management team at Mercedes-Benz. Her team aims to accelerate Mercedes-Benz's electrification and digitization strategy through critical technology investments, acquisitions, and partnerships. Her background combines M&A, automotive, corporate venture capital, and startup experience. She joined Mercedes-Benz from GrubMarket, where she was the head of investor relations. Prior to GrubMarket, Holly was an investment principal at SAIC Ventures. Before that, she was an investment banker in the technology, media, and telecom group at Guggenheim. I'm so glad we have Holly's perspective on today's panel. It's great to have you all here today to share your views and insights into this very important topic. The discussion part of this session will last about 45 minutes, with a final 15 minutes or so reserved for audience questions. I'd like to ask the members of the audience to prepare questions that you may have for the panel, and during the discussion, submit your questions in the Q&A section of the conference platform. One of the things that's really exciting about the panel is that our theme for today is the future of EV and charging infrastructure. So we get a glimpse into the future. We get to predict what we'll see going on in the world of EV and charging in the future. And not just in terms of technology, We can also do some predictions in terms of applications, use cases, public policy, financing, and others. So I think our audience is in for a special treat today. Okay, let's get started. I'd like to ask Ayn to kick things off with the first question. Ayn, how would you describe the current state of public vehicle charging in the United States?
Thank you, Andrew. Just full disclosure, it's a little bit of a setup because I shared a story with Andrew recently about taking a trip using EV vehicles. And so I'll relay that same story to everybody here. So I'll steal a few minutes. At Faction, we build driverless electric vehicles, but more for fleets. So fleet is our primary focus. But I've been an EV driver and owner for about 9 years. And so my daily commute is with electric vehicles. And the story I'll share is a little bit about my impression with the current state of our charging infrastructure that we have to contend with. As an EV driver, if you're used to using them for daily commute, whether it's school or work, et cetera, it's really a great experience if you charge at home and you stick with your loop. You commute to work, you come home, you charge, you leave the next day. That's the typical use case. The second you start to try to get outside your bubble and you want to try to take a road trip with an electric vehicle, things can kind of head south a little bit. And it's actually gotten worse over the last couple of years. And so the story I'll share is what happened a couple of weeks ago, where I was going from the Silicon Valley area down to Monterey for an event that we were showcasing our electric vehicles for Faction. But I was using a personal vehicle to do this. Now, this round trip was it's 90 miles each way. So you're talking a little over 180 miles that I had to put on the vehicle. And this vehicle has about 200 miles of range that I was driving. And so just to feel comfortable, you want to do a little bit of charging before you actually make this trip complete. And anyone who's tried living with electric vehicles knows that DC fast charging is typically what you're looking for because it's the only way to do it in a reasonable amount of time. So trying to be smart about this, as I was leaving Monterey, I said, well, let me just top up at the chargers over in the Marina area just north of Monterey. And I want to get a coffee at the same time. So when I pull into the charging location, I have my choice between EVgo chargers right next to Starbucks or 6 charge point stations across the roadway in the parking lot. So I pull in the EVgo ones. One of them is disabled, not functioning. The second one seems to be working. As I plug it into the vehicle, you hear the contactor go, and the vehicle then clicks off, and an error comes on the dashboard saying, high voltage battery error. Vehicle will not start. So within 30 seconds of arriving at the DC fast charger, I have disabled my vehicle. And so at this point, panic sets in a little bit because I was trying to be smart, trying to get myself home. And now I might be looking at a tow. And so when you call customer support or basically roadside assistance, the agent's a little confused, trying to find out, is this an EV? And I explain yes. And they say, we can tow you to a dealership. It's like, well, this is not good. I don't want to do that. So I hang up with them. And since I'm a geek, I mess with the system and I let the vehicle go to sleep and try to reboot the system. And thankfully, after about 20 minutes, I get the vehicle to start itself again. All right, I'm going to drive across the street to the 6 charge point stations waiting for DC fast charging. And as I go over there, red LEDs across all 6 of them saying unavailable. So now I've futzed around with the vehicle for a while here. And I said, okay, well, let me at least get on the road. I'll get back over to another section of highway. I know about half an hour up the road, I might find some other DC fast chargers. And thankfully, I find one that's functioning on Highway 101 and I'm able to get home that evening. But I had to go right back down to Monterey the next day. And whether I'm, foolhardy or I'm just a true believer, I decided to take the EV again. So I go all the way back down to Monterey, but this time I'm going to be smart. I'm going to come up through Santa Cruz County. They got 4 DC fast chargers there. Whole Foods has them. They have them over by another supermarket. And as I'm returning the next day, I look at the app, and of course the app will give you status, and you realize, wait a minute, nobody's successfully charged at the DC fast chargers at the Whole Foods in over a month, which means they're offline. And so at this point, I head for the other supermarket and I pull in front. And sure enough, one of the stations is disabled. Thankfully, the other one's working and I'm able to plug in and charge the vehicle. And so the anecdote here is basically I'm living in Northern California by Silicon Valley and normally use these vehicles every single day for my daily commute. But it's the second you try to go take a road trip with them, it starts to become gambling with whether you're going to find working infrastructure. And in my case, this was 15 to 20% of the DC fast chargers I had attempted were functioning. The majority of them were not. And I think the interesting thing to tee up for us as a panel to discuss this is when you think of the current state of infrastructure, it's been kind of haphazard how it's been installed. But on top of that, the maintenance is completely lacking. And so what's happening is nobody's actually maintaining the network that has been installed. And I would say outside of maybe Tesla's network, because Tesla kind of treats their superchargers as part of their product. And so similar to how Apple gives you walled garden experiences, Tesla's trying to do the same thing with their electric vehicles. But for the rest of us in the industry who are working with multiple OEMs, or you've got people building vehicles and people building charging infrastructure, collectively, we have a lot of work to do if we're going to be successful to convince the rest of the world to transition to EV. And as I said, I'm a believer on this one, but we're not there yet. And this is going to be one of the major impediments to getting the average consumer to actually adopt electric vehicles. So I figured I'd just share that quick story. I did send Andrew photos of various chargers I'd encountered along my way. And the other reason I chose Santa Cruz and not the Highway Summit 17 ones is at one point I went over and tried to use those. They had bullet holes across the front of the charger. Somebody had actually shot out the displays even. And they were offline for a couple months too. So I think the maintenance is seeming to be the biggest issue. And I think figuring out how we actually make charging accessible, as well as in locations where people need to be able to access them, is going to be one of the key things, which I figured this might even be a good tee up for Rebecca, because I would love to hear what she's up to with her company as well.
This was excellent. Who doesn't have an EV charging horror story? On our very first in-person meeting with my two co-founders, Tosh and Venus, we decided we were going to go to Big Bear as a retreat. It was the first time we're all meeting in person. We were so psyched about it. We got in Tosh's electric car and he did not bring his wall charger. And there were no chargers in Big Bear, no non-Tesla chargers. And he did not have any miles left. So he tried to go to a level 2. It was like 15 miles away, but Big Bear's on a mountain. So he drove down, got his charge for 4 hours. It was a level 2. He came back with fewer miles. We were kind of freaking out. Similar situation. Luckily, this lovely gentleman who we literally followed because we saw he had an electric vehicle, we used his wall charger eventually, but we looked everywhere. So I totally relate. We definitely need better infrastructure and maintainable infrastructure, to your point. At ChargeNet, we are installing fast chargers at fast food restaurants with solar and storage. And we are actually installing these in several low-income areas and trying to democratize EV charging. And similar to what you're saying, we need EV charging everywhere, and it's not, or it's unreliable. I will also plug one of our partners, Charger Help. They're who we're partnering with for maintenance of these chargers. And there aren't too many companies out there that are actually like doing the maintenance and trying to make sure we have good upkeep of everything. We need more folks in that space to make sure that we can keep these things online. And I'm very excited to see what they do next.
One thing I was curious about, and anyone else jumping on this one too, given I'm working on electric vehicle fleets, we've already assumed it's a foregone conclusion we have to put our own charging in at our fleet depots because we won't be able to rely on any of the current public infrastructure, and we don't see fleet support coming anytime soon that we might be able to leverage for what we're trying to accomplish with light electrics. When I struggled to see what I do as a consumer with them, I figured there's probably a lot of money was spent putting in the infrastructure, and whether or not they plan for the maintenance, or do the economics even support having a fleet of engineers out there driving around fixing these chargers. I'd be curious to hear if others have opinions on what is affecting the current infrastructure, because there's a lot of money was put into these stations. And at the end of the day, having them down for a month or 2 months at a time, not only is it a big inconvenience for consumers, but that's also lost revenue for whoever this network this is.
So we are dealing with this firsthand, right? We have several investments in vehicle charging infrastructure, a couple that I can disclose, a couple that I cannot. I think the main problem, the fundamental problem, actually there are two main. One was cost. I think one is the equipment was not scaled, so it had cost a lot. So you skipped everywhere you could to make the economics work. And then the second fundamental problem of the skimping is, I don't want to get specific, but companies, and it's not just about ChargePoint, but companies like ChargePoint decided to cut out their electrical contractor and go directly. Well, that may proven to be fatal error for many of the chargers, because ChargePoint is not in charge. The electrical contractor that is in that building or that partner is not in charge. The building owner is for sure not in charge. So even though it's a simple problem, it doesn't have an owner, right? So that's what we have seen as a fundamental problem. It's not a technological problem. We're going to get to that later. It's a problem of ownership. So we backed the company Loop because they were able to create these relationships and fundamentally don't think about just about installing, but maintaining. And a lot of people say, but who is maintaining it? What is the responsibility? It goes to that level. That brings me back to the cost. If we want to have a good maintenance, we need to fundamentally lower the CapEx, right? because otherwise you just don't have enough money. So you need to lower the pricing of these things, move things from hardware to software. There's just a lot of things that can be done. Why do you need so much metal in these chargers? Level 3 is a different, but at level 2, it's a plug. It's a plug with some sort of payment portal. It's a level 2 charger. Let's not overcomplicate things. Let's not sell the equipment. Let's sell the service. Let's sell the maintenance. So I think that's what we see as fundamental challenges. I think the struggle is real. Just to give you comments from some of our investors, we have 110 corporate LPs from the real estate and industrial world. And some of them say, we don't hate ChargePoint enough to switch. 2 weeks later, they come, just kidding, we are fed up. So this happens, and this is not just about ChargePoint, this is about other companies who are early incumbents. It's just a matter of, actually, unfortunately, you'll have to spend money on this. I know you have profits to show, I know you have margins to show, but they will start losing customers and hopefully that will wake them up. That's kind of my take on this. I know that TDK is a technology shop, but this is not a technology question. This is a service and maintenance issue.
I can jump in here with some thoughts from my perspective. I am an optimist. I am not an EV owner, but I am an optimist. I believe we're still seeing the struggles of the first phase of deployment here. And I'm really curious to hear what everyone else on the panel has to say about this. But I believe we're still understanding utilization, understanding how the numbers would pencil out for deploying infrastructure, understanding what the best business models, how the numbers actually look like. Do we need another revenue stream to make this station work? How will the maintenance evolve? And I believe we are seeing those models changing. We are seeing more companies focusing on the maintenance. It may be more about the CapEx and costs than technology. I still think technology will be a part of that. But I think we're still in the initial phases. And as we get more understanding, I believe there is no magic number to what we should strive for in terms of public vehicle chargers versus home versus workplace chargers. But I'm really curious to maybe get this question back to Rebecca, how you are thinking about utilization and when you are thinking about deploying, what kind of numbers are you thinking? Why are you thinking about those specific locations? And how do you narrow it down?
Yeah, our business model works because we have solar to offset a little bit of the utilization risk. We are expecting slightly lower utilization numbers at the beginning here, while we don't have potentially as many customers walking in, simply because our target market is everybody, including low-income folks who don't necessarily all have electric vehicles at this point in time because they are currently too expensive. So in our business model, we basically try to offset the risk with some clever energy management with our solar and our battery backing these EV chargers. There's already programs in place to take advantage of energy storage, but we're hopeful that we can use these assets for even more in the future, like the ELRP program that's semi-new right now and has some limited scope for energy storage. Back to the utilization issue, I think that's also just like an issue for investors, right? Our biggest pushback whenever we're saying this is what we want to build is, what's your utilization rate going to be? And honestly, I don't think anyone knows for sure at this very moment. You can project all you want, but the different utilization curves are going to look very different in different places. And we've done the best we can by interviewing electric vehicle owners and asking, what do you want at your station? And the response was food and a bathroom. So all of our charging stations are at quick serve restaurants, with Taco Bell being our first one right here in the background. Yeah, I'm interested to hear other folks' view on utilization and addressing the greater market too.
So may I ask you a fundamental question? Is electric vehicle charging a business or is it a service? That's like asking what's an ROI on a train system. I fundamentally don't think that utilization should be problematic at the beginning, right? There may need to be some incentives and subsidies, and there are. I think, Maria, where I believe the technology will play a role is as utilization increases and we're starting to hit the limits of the electric grid. That's where the technology will start coming into play. How do you distribute the power on the charger? How do you add more power, etc.? But at this point, we are just at the very bottom of this deployment cycle. I don't think we should be focusing on utilization rate at this point. It's about taping up the United States and, for the matter, the rest of the world with chargers. At this point, it's about building the confidence for the system. So unfortunately, my answer to this is I think The utilization should not matter now. It's about building out a network, and it's about public good, in my view.
It shouldn't matter, but every investor we've ever talked to has brought up utilization, right? If it doesn't matter, why is it always brought up? It's because it's how you're making money in the short term.
Well, I can tell you that at least in buildings, they always ask about it, but they're willing to provide it's an amenity at this point when renters are not willing to rent the apartment because they don't have a charger. It no longer becomes a utilization question. It becomes can I rent out an apartment or not? Can I rent out a hotel room or not? How many clicks I'm getting on Expedia because I don't have a charger? So at that point, hopefully the discussion will start shifting. Is it going to happen within weeks? But I can already see some changes with at least our investor groups, the hotels, the parking lots of retail places, the multi-tenant buildings. So those questions are starting to pop up. So hopefully we're heading in the right direction. But I hear you, and I'm guilty as charged.
So I got a two-part question I'd like to throw out. So while I'm an EV consumer, my business is about running driverless electric fleets. And so our vehicles as EV fleets, we're not going to be the only ones. There's also going to be delivery vehicle. We do micro logistics delivery as well as vehicle on demand. So the delivery fleets, our job is to keep those moving all day long. So we're going to be charging them in between missions, everything else. So the utilization will be relatively high for any of the depots where we have our vehicles. But at the same time, when we start thinking about missions for fleets, especially commercial fleets, your range is not always just out and back and eating the deadhead miles on the way back to your depot. It's could you top these vehicles up while they're in the field or strategically position them around cities? And so the way we look at it right now at Faction is that we're probably going to have to invest in our own infrastructure, but ideally, we would love to piggyback off of infrastructure that's going in with others that are even trying to serve consumer fleets. And so two-part question is, the first part is, what does everyone think of fleet users? Because technically we could drive the utilization a lot higher than early consumer adopters, because we'll pay now if we can have locations where we can use them. And of course, we'll want a certain service level to make sure that those are working every time vehicles are showing up at these locations. The second part is also future-proofing that infrastructure, because it's very expensive to drag in cabling from the electric company, trenching, everything else. And the needs today, Peter mentioned level 2. I think level 2 is already obsolete. And so level 2 is like an emergency for those of us with electric vehicles. For light electrics like we use at Faction, we could probably get by with it a little bit, but we also really want DC fast charge because we want to keep the utilization of our fleet vehicles moving as quickly as possible. And it's a convenience for consumers to have DC now, but I think, dragging more level 2 right now doesn't make any sense. You're putting in obsolete technology already. So the two-part question there, what do people think of fleets? And then also, how do you future-proof so not only can you service consumers, but also fleets and other users as we grow?
Hey, this is Holly. I'll jump in here. I think the question you mentioned, Ian, is exactly the difference between a fleet customer versus just everyday consumers, because most people probably charge at home for most of their needs, whereas fleets, they need to charge very quickly so they can get back on the road. So definitely there's a huge difference between the needs of these two customers. And I think also from a infrastructure perspective in the US, we're also trailing a lot of what you see in the rest of the world, both in fast charging as well as in the level 2 charging, because I think 85% of world chargers are actually in China. So in the US, I saw the stat and I was kind of shocked. 100,000 EV chargers and only 22,000 for fast charger to gas stations. That's a huge difference. And hopefully the recent infrastructure bill that provides $5 billion to help the states install EV chargers along interstate highways to cover 75,000 miles of highways. That help make the chargers more prevalent. And federal funds covering the cost of chargers installations is also important. And to that, if you think about the IRA also increased the tax credit we talked about cost a lot. In the last few months since the IRA has passed, we have learned there's an increase of the incentives from 30,000 per property to 100K per charter. That's a huge difference. So I think these policy incentives will also help democratize EV charging in the US. And definitely agree with Peter that we're early innings and there's definitely more demand, as maybe it's a matter of matching the demand with supply because people don't really know where they are, and the utilization rate for some chargers, like Maria mentioned, are low, and investors are asking these questions. But in the longer run, I think with the government incentives as well as chargers are also driven, the demand is driven by the number of EVs, and both kind of feed on each other. for that adoption. So hopefully with government incentives and also the automaker and regulation, we can all move toward that more mature state. Just like in China, we've already seen that market develop. And also I think supply chain is an important piece of that as well.
So Holly, do you have any anecdotes from the China market in terms of government support versus private support? I'm not putting faith in the US government to make sure they solve our charging problem right now. So it's still going to have to be a public-private kind of a combination at some sort. But I'm curious what your take is. I know the money's there, but if they shower money on the existing incumbents, I see more broken charging infrastructure.
For sure. I mean, China has been developing its entire EV industry for a lot longer than the rest of the world, from investing in the battery supply chain to investing in EV chargers and also giving very aggressive subsidies and tax credits to purchasers. And in China, there are a lot more two-wheelers and three-wheelers, if you call them EVs, in that capacity. But the increase in sales of EVs globally is primarily led by China. And that's definitely it accounted for half the growth in 2021. So I would say there's a huge role that the government is playing in that market. And Europe actually is much better than the US in this regard because the clean vehicle sales was a lot higher. It was around 2.3 million last year. But in the US, it's only around 600K in 2021. And it was after 2 years of declines. And also China, from a cost perspective, the average BEV, excluding China, is around $50,000. And China's average is around $27,000. So there's a huge difference in terms of the affordability, which drives as well. So if you add to that also the supply chain, as part of the IRA, the US government is promoting domestic production, but China today handles 3/4 of all lithium-ion battery and 70% of the production capacity for cathodes and even a higher percentage for anodes. So that's also an ecosystem difference between the two countries. And the US has a smaller role right now, but hopefully with the passage of the IRA and policymakers in the US are putting more incentives in the space to ramp up domestic production.
You mentioned that level 2 technology is obsolete. Let me challenge you a little bit. So I agree with you for fleet charging and public charging, etc. We need to go level 3. I think the matter of cost is really important and matter of speed of deployment. So for places where you can stay for multiple hours, homes, offices, multi-tenant, you need to deploy level 2 because it's quick. It's not that costly, at least hope that not the next generation. So I know level 3 is to provide the full comfort, but I think level 2 has a place in the market, in my view, because we need quick wins. We can't spend so much time, and there's questions around taxpayer money and all of that. These things may have some utilization rate and are not that expensive to deploy. So do you agree with that?
Yeah, I would agree. Coming back to my story about doing the road tripping, if you're going to take a longer trip with an electric vehicle, you need to avoid level 2. Level 2 is an emergency backup, right? I think if you do the math on this, like charging a typical Tesla Model 3, charging it on level 2 for about 10% battery, you'll be there for a day or more. When it comes to home users, for example, like the EV I drive at home, I can charge full up on level 2 in about 10 hours. So as long as it's plugged in the night before, it's ready to go the next morning. And so even for our fleet vehicles that we have at Faction right now, ours are light vehicles. So we have about 19 kilowatt hour battery packs. So even doing a top up with a level 2 throughout the day at a depot, that makes sense. Or having those vehicles overnight. So I agree with you 100%. If it's part of your fleet operations or it's at a workplace, I agree. Level 2 is the cheapest way to do it. And it's a way to get it out there quick. It may not be the charging standard of the future 10 years from now. So I think that there is also a counterpoint to that is if you're going to be installing level 2, you need to future-proof that installation a little bit. You want to be able to swap those chargers out over time. We've seen a lot of people who spend a ton of money like trenching parking garages and putting things in for short-term parking with level 2 stations. And then that is maybe a marginal value. But if you're going to be places where you're going to be 4, 5, 6 hours, then I can see the utility of level 2 still today.
That is such an interesting point, Peter. And maybe just going back to the China numbers, I just came across this article last week that said that, I believe it was in the past year, China has added more chargers than what the US predicts we will have by the end of 2030. So if we think that the first step is just speed of deployment, and then we'll get to technology, and then we'll get to reliability. And we see how China is leading in electric vehicle sales. I think that may be part of the reason. It may be several other reasons, right? Just initial price points and definitely having more offerings. We may not know, and there's no magic number, and there's no magic formula to know what it is.
How do you think China is deploying so much infrastructure so quickly?
This is what I heard. My understanding is that they had the advantage of being able to prepare the grid for this. So there's some investments into the grid that were done beforehand. So they had the fortune of not having the grid fully built out yet, whereas US set up its grid, especially within cities, to a certain level. And now you're facing a problem of, okay, I can only put this much fast charger. My understanding is that China had a foresight to actually oversize the grid, so they are able to put more chargers quickly there. The second side of it is it's viewed as a strategic asset, not as an ROI play. It's viewed as a public good, so there's no venture capital dollars that needs to support this investment with the required 5 to 10x return on the investment. That's my understanding is the two main differences, but I don't know if anybody else heard, but I was dealing with the battery markets in China for quite a bit. So in the early stages, at this point, it's just no longer a question. It's just they strategically have decided to become an electric vehicle superpower.
I can give an anecdotal one, not directly related to the time I spent with vehicles, but I used to do a lot of work in consumer electronics before I got in the vehicle space. So I worked with a lot of companies in China when we were doing manufacturing, as well as they were setting up new infrastructure. And the other big advantage China has is when China decides to do something, you get the full force of the government support behind it, and it just happens. And so in places like the United States, the regulatory frameworks, as well as permits, approvals, everything it takes to actually put in infrastructure is always moving slower. And you'll see this in not only China, Taiwan, other countries where they decide something's for the public good. If you're going to put in high-speed rail or you're going to put in transportation infrastructure, the amount of progress they'll make in 2 years is something that would take 10 to 15 in the United States. And so I think part of that is that once they make a decision to go, they just make it happen. And so I think in the United States, if we were to try to keep pace with that, it means we would not only have to provide the money, but I think you would have to have a streamlining of the government processes for putting it in.
Yeah, so one of the biggest barriers we've hit, which we have overcome because we have a wonderful leader. Venus, my co-founder, chief operating officer. She worked for Southern California Edison for 15 years, is well equipped to handle utilities. But each utility has their own process. Many of them are still new to the EV charging space. And the timeline for getting fast chargers installed is something like 6 to 9 months. If you're lucky, that's like very, very quick, right? I would actually argue now that we've got the federal government, IRA, and loan money behind it, I really think it's the utilities at this point slowing us down in terms of installation. I know for a fact at least one utility has like a wait list of 100 different fast charging sites, and they're probably, not 100, hundreds for next year. And it is very doubtful that they would get through all of those in the next year. I'm not quite sure what we can do to help push the utilities to be a little faster, other than maybe encouraging more hires for them to handle the bandwidth and handle the projects. Curious if anyone else has ideas.
Yeah, well, I saw Andrew put a comment up in our speaker chat of seeing our microgrids not an answer to this. I'll put the hopeful one out there as a fleet operator of vehicles, is that when we look at deploying a new area, exactly to your point, Rebecca, when we talk to municipalities as well as locations, you might be able to get the permit to install the charger, but then it could take the local utility company 12 months to get out there and hook up the cabling just because they're backlogged. But you might be able to put your charger in, but you won't get any power to it. And so one of the things that I think when it came to microgrids, as well as kind of independent setups, there's a handful of companies that are doing the battery plus solar combo, where you can maybe top it up or trickle charge it from the grid to alleviate needing a high power connection, but then you can top it up during the day a little bit. There's a handful of companies working on solutions like this where you've got these portable stations. The other nice thing about those, when you think of a fleet use and you need to get strategic locations around an area, is that typically if you drop something in a parking lot that is self-contained, your permitting requirements are either non-existent or very minimal compared to putting in physical infrastructure. Whether or not we're going to be able to get enough power to those independent setups would be interesting. But as a fleet operator, that also gets us excited because, except for maybe also creating more competition for batteries, but it is a way to deploy a little bit quicker too.
Great. Thanks, everyone. This has been a really amazing discussion. I'd like us to shift gears and take a look at the results from a poll that we posted on LinkedIn recently. The results were quite interesting. So just give us a second to get those results. There we go. The question asked was, which of the following is the biggest factor affecting the rate of adoption of electric vehicles in the US? A, public charging availability, B, EV charging time, C, EV pricing and features, and government tax credits and subsidies. Clearly, EV pricing and features got the most votes. And I'd like to ask our panelists to share your thoughts on why we see that from this poll question. And what are some of the reasons behind that? And what are your thoughts on how that could affect what we might see in the future?
I guess I can go ahead and try to start here. So one thing I think is just the perception. Obviously, the capex of an electric vehicle is higher than a capex for a gasoline vehicle. But on the total cost of ownership, that's changing. So what you may start seeing is some of the change in the financing models that may start reducing this cost. I think humans are not good at thinking about their ongoing operating costs. I think that will be one feature that will help, and I think a lot of people are heading that direction. The second thing that's happening, and I'm very positive about this, even though we see some increases in pricing lately, the battery prices are going to plummet. I see technologies coming out that are just phenomenal, scaling now live in the United States. We've seen this in solar. We'll see the same thing in batteries. The gigafactories are being built out. We're so short on capacity. We'll be long capacity very soon. I'm not saying it's going to be in a year, but I think that will help tremendously. I think pricing is heading in the right direction. So hopefully this big slice will come down significantly, and it will be more about the public charging availability, charging time maybe. But I do believe that the EV charging is not going to solve itself, but it's heading in the right direction pretty fast.
I'll second it on the EV pricing and features. And granted, I feel like Faction, we're in the middle of this right now, where like you can see one of our prototype vehicles behind me. We're big believers in right sizing the vehicles. I like to make the joke that bringing any of us a pizza in a 4,000 pound EV with 300 miles of battery range is a little bit of overkill. And so as you start to right size the fleets for delivery as well as urban trips, even the average Uber ride, it's 1 to 2 people, 3 to 5 miles. So once again, using full-size vehicles as one size fits all, it's just congestion and gridlock, et cetera, and they're expensive. If we can start to get people to right-size the vehicle usage, and you're seeing this a little bit, micromobility was leading the charge here too with e-bikes and scooters and things. But these middle ground vehicles you can start to use for regular operations. They don't necessarily have to become an owned asset. They're things you're going to hit a button and it comes to you driverlessly, then you can use that vehicle. These will help to not only get the cost out of these vehicles because they need much smaller battery packs, which ride the curve that Peter was just talking about, where not only are the batteries going to get cheaper, the vehicles will be cheaper. And you get to get these shared fleets where it makes it a lot more accessible to a lot of people. You don't have to be highly affluent to be able to use these vehicles. It should be for everyone to leverage. And it puts the focus a little bit back more on the charging infrastructure, how you're going to use these shared fleets. But I think there's a number of levers we're going to be pulling as an industry for both right sizing and cost reduction. So I think we're all very bullish on that. We're all still a little nervous about the infrastructure, but charging, that'll be the one thing that we all need. But I think there's a lot of great things happening right now in terms of the EV fleets and availability for the vehicles. I think Holly even spoke this too. In China, the growth in their EV market is not everyone riding around in Model 3s and full-size EVs. That they have a very wide range of vehicles that are available to the population there, and they're being used where appropriate.
Yeah, I think it was also mentioned earlier that the affordability is basically the decision driver for a lot of consumers. And I think decline battery cost is a driver in the past few years for the increase in EV adoption. And obviously that drives the charging infrastructure build out as well. I think this year is an exception because we did see commodity prices go up a lot, and there's a lot of geopolitical reasons why certain raw materials are going up in price. But in the long run, the cost of battery will come down. And that's really the catalyst behind the EV infrastructure and charger build out to support that level. I think also from a recycling standpoint, I think that's going to also contribute to moderating maybe some of the raw material costs, but probably more so after 2030. But, you know, that's also relative to where oil price competitiveness of EVs may not have been affected that much if you also count the oil price increase as well. So that's also a factor. And in China, the vehicles cost a lot less. And also charging infrastructure costs a lot less because it's just the ecosystem is more developed there.
Great. I really appreciate the panel's perspective on this. This has been fantastic. And before we transition to questions from the audience, I want to ask each of the panelists just one question, just rapid fire. If you were having a conversation with a young entrepreneur in the space, what piece of advice would you share with that entrepreneur? Holly, I'll ask you to go first.
Okay, great. I think it's really about identifying the gap in technology and to really address the biggest pain points that people have. A lot of entrepreneurs actually start from a technology that maybe it's their thesis in school and it's a great discovery maybe from their lab. But I think attacking the issue from where people's pain points are and then finding a solution to that is going to allow people to really build great companies, because a lot of great technologies goes unused because it's not exactly fitting to the solution that people are looking for. I would say that would be my advice.
Ayn, would you like to go next?
Sure. I would say that the industry is so early right now still, even though it seems like a lot of money has been invested already and it's been getting a lot of attention, but it's so very early that anybody's excited about what we're doing in the vehicle space, mobility. I think you should start and find a problem you want to go solve. And then as you look at that problem, go start to look at how you put a business model around it that actually works. I'll use my case in point with Faction. We do driverless vehicles. And I make a specific point of saying we're driverless, not autonomous, because we're a combination of autonomy with human teleoperators. Because at the end of the day, people ask us, is my competition all these big dollar companies? It's not. My competition is the person willing to drive the 15-year-old Honda Civic for DoorDash, because that sets the economics. It's $2 a mile. And so similar as we talk about charging infrastructure, there's a business here for charging, but how much are consumers willing to pay? What kind of tech would you apply to it? Just because you could build the world's most amazing block of 100 chargers and figure out all the tech you'd apply to go do this, is that a good business? I think Peter brought up the point, is it a business versus a service? Figure out what the problem is in the space that you're excited about and that you want to solve, put a mix behind it, and then see which technologies you want to go invest in and work on to go and solve that problem. Because there's a lot of very innovative solutions out there. I talked to a number of other startups that are doing things, and I even see people posting in the chat here, check out my startup, check out this one here. And I know a few of them actually personally, I just noticed a few names in there that are working on very incredible approaches to solving real problems. Solve the problem. Don't just get enamored by the tech. The tech, it'll be there for the tech. And I love cool technology, but I also love to see cool technology that you can actually ship and actually make a difference in people's lives. And so if you put a business around that, your tech, and get started now, there's going to be a long tail here. We're just getting warmed up in this industry.
Very cool. Maria, would you like to go next?
Sure. I definitely agree with find a big problem, go after one that you're excited about. To add to that, think about how you communicate your idea and how you tell the story. And this may be coming from the venture investor perspective, but as much as we all get excited about technologies and we all get excited about business models, you need to be able to tell a good story to make sure that everyone else is excited, maybe people that don't know the space as well. And this is something that maybe particularly in this space, I think we're still seeing those entrepreneurs, storytellers evolve, but definitely being able to tell the story behind everything that you're building is super important. And so focus on that from the beginning.
Very good. Rebecca?
People are really important. So be super, super picky about who your co-founders are and find people who don't have skills that you have. And you're like, wow, I don't know if I could have done what my co-founder just did. That's amazing. Those are the type of people you want to work with. And if you're an entrepreneur, you might try a couple times with people and you don't gel right, or they have too much of an overlapping skill set to you. You want to find people who are very different from you and who have complementary skills.
Peter?
Really quickly from my side, I know we're running out of time. My advice is stick with it. I think we're in the midst of one of the biggest economic transformations in generations, meaning electrification, EVs. I was there in 2009 when everybody said that solar was there for the dead and there's not an investable sector. I mean, they couldn't have been more wrong. Yes, there'll be a year where funding will be difficult and there'll be bankruptcies and there'll be issues. It's an unstoppable trend. So pick a meaningful macro, might be electric vehicles, whatever that is. Stick with it. It will come out on the other end. It'll be amazing.
Awesome. Thank you so much. This has been just spectacular. Now we'd like to transition to questions from the audience. The first question is from Stanley Lee. How do you envision changing the financial incentives to ensure there are enough chargers along major routes and highways?
Oh, I have huge opinions on this. Time of use rates along major highway routes makes such a big difference. Specifically, the utility rates for the chargers can have a huge effect. I think it shouldn't just be time of use, it should also be location based so that we can make sure, for example, chargers are charging from the greenest energy too. And we could charge more for not green chargers.
Second question. Please speak of regulatory challenges for EV net interconnection. Please comment on permitting for innovative solutions like portable carport with integrated EV charger.
It sounds like another one for me. I think, as we spoke about already, there are some pretty big challenges. I will say going to the Public Utility Commission in America seems to be the best route to getting stuff done. So definitely use them. They've been very helpful to charging it.
Okay. Question number 3. This question comes from Victor Karamalis. Are open source initiatives the best way to build out charging technology? For example, Open Charge Alliance. Tesla has fared much better with its own network.
I'll comment from the fleet side of things. I think we take it as just a given. We're going to have to build our own networks right now because we're not seeing enough traction for cooperative systems or where we can actually have them placed strategically where we need them. Yeah, I'd like to see that change because our goal is not to become an expert in charging infrastructure as well. We want to partner with those who are. But I think, Tesla is one of those good example stories that when you're doing a frontier tech project and something that's completely new, as being one of the leaders in the EV space, if you really want to make sure you're successful with it, you have to control a number of variables around you. So I think Tesla treats their charging infrastructure as part of their product. Supercharging is front and center with what you get when you purchase a Tesla. And because of that, it gives them a strategic advantage, not only as a first mover, but also as they scale their own network. It's going to be really hard for another vehicle manufacturer to offer a similar ownership experience like they have. And so their charging network has become a big asset to them, and they can also monetize that asset with others. It'll be interesting to see what happens. If we can catch up on the public-private side of things a little bit, that's maybe one way to solve this. Otherwise, the companies that guarantee that they have access for their customers, so it is kind of captive a little bit, are still going to be able to provide the best possible experience to their end customers.
Very good. Our next question is from John Liu. He seems fast charging is an unavoidable path for the fast growth EV industry. However, level 3 and above chargers are still a small percentage. How fast do you think level 3 and above charger deployment can pick up?
Rebecca, that's you again.
Yeah, I think once we have done at least one of our sites, the utility kind of looked at us and was like, wait, solar and storage with chargers? How do we do this? Now that we've got one, I think deployments will go a lot faster, but kind of dreading doing this process with every single utility in the US. I would love to see some standardization in what you have to do to get your stuff deployed safely. I know we touched on China. I do wonder a little bit if the US has more maybe safety precautions. Again, I don't know a lot about the China market, but there are a lot of hoops to jump through, and maybe they're warranted. But if they are warranted, everybody should have the same process across the board. That would definitely help speed things up.
Very good. And our last question, outside of the charging station, what power infrastructure is needed to sustain charging? Who should pay for the infrastructure, and can the cost be pushed to the consumer?
I'll try to answer this one. There is so much more needed. You need more electricity, more wires, more transmission, more inverters. Unfortunately, this is a utility problem that will take years to solve and should be pushed to the consumer. It will be pushed to the consumer through the rate base. Utilities love it, but they'll take their time. So there's not even a question, but any investor-owned utility will go into a rate base. And by the way, I do believe we should encourage this, because if that's the way to get utilities on board, so be it. If this is their way to preserve their business, they need to improve the electric grid. So my opinion is yes, and everything needs to be upgraded.
Thank you, Peter. This has been a remarkable session, and I think we can all agree that we've learned some extraordinary insights. I want to give a huge thank you to our amazing panelists, It was a pleasure to have you join us, and thank you for the wonderful insights that you shared. I would like to thank our event partners from the energy innovation ecosystem who are supporting Energy Week. Without their support, it would just not have been such an amazing event. I would now like to highlight a few interesting startups in the EV and charging infrastructure space and call for support for early stage innovators. For all of you in the audience, a sincere thanks for taking the time to participate. This concludes today's Energy Week panel discussion session. For those in the audience, don't forget that we have more Energy Week activities tomorrow and the day after. We'll be hosting interview sessions and panel discussions on electrification, decarbonization, battery technology, and the future of mining and the battery supply chain. Please check the Energy Week website for more information on tomorrow's sessions. Thanks again to all who joined.